Hi, everyone, and welcome back to the weekly MMA Cycles Market Update. This is Gianni DePocia, your host. It's great to be back with you on another Friday afternoon. We had another interesting week in many equity markets. A couple key signatures unfolded that led to some big moves. We had Mars go stationary direct on the same day that the CPI numbers indicated that inflation is indeed starting to cool down, but time will tell whether this cool down in inflation will persist, considering Saturn is on the cusp of moving into Pisces in March, and Jupiter will eventually be moving into Taurus in May. So whether or not Saturn leads to more shortages in petroleum-related products or fertilizer inputs remains to be seen, but Jupiter going into Taurus would seemingly lead to an increase in demand. But I want to review some charts with you today, starting off with the Dow Jones. Nice reaction to the CPI report. Initially, markets or equities sold off after we had the report come in at estimates month over month, but consolidating the gains here over on Friday. So looking like we're going to go out near the highs of the week. Markets will be closed on Monday, January 16th, in observance of Martin Luther King Jr. Day. So we will have a shortened trading week next week, but overall looking pretty good going into next week. The NASDAQ continues to lag behind, but it is showing some signs of improvements as, again, Saturn is in the last 6 or 7 degrees of Aquarius now. We're starting to see some improvements in this space, and needless to say that inflation coming down is a good sign for the technology sector. Want to take a look at interest rates. Interest rates are down on the week, rising a little bit here on Friday, but overall the lower inflation CPI numbers are a tailwind for higher bond prices. So this means that, rates could actually fall going into home buying season, which is just around the corner, and that could provide real estate some much needed relief. There is some concern on that front as we are just a couple months away from the prime time of the year where home buyers like to look into the real estate market. Take a look at the US dollar. We're looking at the spot index here. Sharp decline after the CPI numbers, basically indicating that the Fed is less likely to be as aggressive with the rate hikes going forward. At the moment, markets are only expecting traders to raise rates another 25 basis points twice. And then by the end of the year, actually, we could see a rate cut as soon as November. So dollar selling off. There's also been some major developments in Japan, where the Bank of Japan is seemingly losing control of their yield curve control program, meaning that rates are starting to rise a little bit faster. They're having difficulty controlling their cap of interest rates in Japan. So that's leading to a massive surge in the value of the Japanese yen. We're also seeing a rally in the value of the euro. So the dollar is selling off, and this has been a tailwind for equity markets in the United States. It's also led to an outperformance of equity markets abroad. So we're seeing stock markets across the world perform better than domestic stocks in the United States, which is a massive trend change compared to what we've seen in recent years. I want to take a look at a couple ETFs here, because we will be having the January edition of the MMA ETF report published next week. We did have the MMA monthly cycles report published earlier this week, which was our flagship product. We are celebrating our 41st year in publication for the flagship report that Ray began 41 years ago. So definitely would encourage you to check both of those out. They're an excellent complement to one another. USO, the crude oil ETF, set to go out near the highs of the week. Here, we obviously have a few hours left in the trading day, but this is a pretty good sign. And one can't help but wonder, with Jupiter in Aries, if we will see another inflammation of geopolitical tensions. And, we're talking about inflation potentially coming down. I think that perhaps Saturn in Pisces, once he gets into there, could lead to a shortage of some form with respect to the energy market. And could geopolitics play a factor in that? I think, if it's going to happen, it's likely going to be the case while Jupiter is in Aries. So we'll have to keep an eye on that going forward. I want to take a look at the gold miner GDX ETF, because gold and silver capping off strong weeks here. We obviously have Venus set to square Uranus over this weekend. And this signature is notorious for breakouts, either above resistance or below support. Venus obviously rules currencies, and gold was traditionally a currency. We know that the sun rules gold, but we also have to incorporate that understanding of currency in that as well. So we've talked about how Jupiter in Aries could end up being bullish for miners. So we'll have to continue monitoring that going forward, but I will pull up GLD and SLV here. You see gold rallying to its highest level since April of 2022, and silver also showing some strength, but pretty much just consolidating near its recent highs. So we do have a case of what's called an intermarket bearish divergence, since gold took out its high from last week, but silver did not. That is a cautionary signal that we'll need to keep monitoring over the next couple of weeks. Some big moves in Bitcoin and cryptocurrencies this week. Bitcoin breaking out, testing key technical resistance here. This isn't surprising. Again, we talked about Venus square Uranus, and that's a key thing to monitor with respect to breakouts. But with Mercury still retrograde, will this breakout hold? So next week we have Mercury obviously going direct on the 18th of January, the same day that the sun will form a conjunction to Pluto. So we'll have to keep an eye on debt markets as well. And we know that cryptos are especially susceptible or vulnerable to moves in interest rates, believe it or not, because when the dollar is offering higher rates of interest, there's not as much of an appeal in the cryptocurrency space. So with Pluto being highlighted in the signature next week, we have to look for a reversal in interest rate markets as well. And then obviously we begin Aquarius season on the 20th of January. So, we'll be entering that period where some financial astrologers have attributed the sign of Aquarius to having some significant rulership over cryptocurrencies, and I think rightfully so, because we'll be coming into that square aspect with Uranus and Taurus at some point in the next month or so. So that takes care of the markets that I wanted to review with you this week. So thank you so much for tuning in. I do have a couple brief announcements. Obviously, I mentioned we published the January edition of the MMA Monthly Cycles Report, so check that out. We have the MMA Monthly ETF report set to be released next week on the 18th, the day Mercury goes direct. And then we also are going to make some big announcements on the third rendition of the Merriman Market Timing Academy, either next week or the week after. So definitely want to stay tuned for that. We have a lot of inquiries coming in on that. So you will want to keep a close watch on updates on that matter. And last and certainly not least, I will actually be giving a lecture with our friends at Astrology University next Saturday, January 21st. So we'll be covering, a wide landscape of financial markets, stocks, bonds, cryptocurrencies, commodities. So would highly recommend that you check that out. Astrology University and Tony Howard are good friends of ours here at MMA, and it's a great way to get some exposure to our methodology and our forecasts over the next 3 to 9 months. So thank you all so much for watching. Wishing you all a great weekend. We'll be back same place, same time next week. Bye-bye now.